maybe it'll be better this time.
Or maybe it'll still be awkward. This is Alex and Elizabeth with Awkward Conversation State. All right. So John Lacka, right? Did I say it right? I forgot to ask you that at the beginning.
Good.
So is from Idaho Housing and Finance.
Idaho Housing and Finance Association, yes.
And you're one of the big dogs.
No, well, I never call myself that. I'm the business development supervisor at Idaho Housing. So work mainly in our single family, handle loan programs, services that help people buy homes. So my focus primarily is on that part of our business.
So is it all just first-time home buyers?
No, and I'm glad you said that. One of the common misconceptions about Idaho Housing, and I think a lot of people feel this way because, by design, we're trying to help people buy single family residences, not help people build their real estate portfolio, but give them an opportunity to be homeowners. Deal just with the people in Idaho, low to moderate income borrowers, because we do have income limits. If you're rolling in at $500,000 a year, you're probably not our people. That's great. But so we try to, because of that, because some of our programs and services cater to first-time home buyers, people get the perception that it's just first-time home buyers. And so, in fact, I was in the store the other day and somebody saw an Idaho Housing shirt. I remember the brand that day. So they asked me, they said, "Oh, you guys help first-time home buyers?" And I said, "Yes, and everyone else too." You do not have, we have some programs, especially programs that are for first-time home buyers, but the vast majority of our programs are for anyone, whether they are a first-time home buyer or on house number 5.
Just not the rich and famous.
We'll take famous people as long as you don't make too much money. Yes.
Do you see Idaho Housing loans when you're helping close loans?
We do. Yeah. We see some direct, direct loans and then broker loans as well. Correct.
Correct. Yes.
But a lot of them are bought. Like the lender will do it and then it it's sold or transferred right over to Idaho Housing, right? You do a lot of in-house.
We do we approach our programs in a variety of ways because we want to make sure that we help as many people as we can. So our programs are available to all the lenders or anybody that does lending in Idaho, whether that be mortgage banker, regular bank, mortgage broker. So we are often the behind the scenes mortgage people. So I supply our programs to all lenders. A lot of those lenders or banks, they do the loan for their client, their customer, their borrower, and then they sell that loan to us. So they underwrite it and fund it per our guidelines for our programs. And then we simply purchase it and then we do all the servicing. Our service center, all the loans that go through Idaho Housing, whether it's from a lender, or a broker, they're all serviced here in Idaho. So
and you've grown quite a bit.
We have. I started Idaho Housing in 2018, and we service just in Idaho. So if you're buying a property in Fruitland, Idaho, you can use our programs. If you jump over to Ontario, then Oregon Housing would handle that because as part of a housing and finance agency, and there's one in every single state, we just focus on Idahoans. What can we do to help people in Idaho buying property in Idaho? So when I started there, we had about 200 employees in 2018, and we just went over 500 employees now. So a lot of that is our service center, but we do all sorts of different things. We'll talk today mainly about single family lending and how we can help support people trying to buy. But we have homelessness programs, rental assistance programs, economic development programs. We do transportation bonds to help fund road projects. So we do a lot of things like that. But obviously today we'll focus on, hey, how do we help support people buying homes in a market can be challenging.
It is. Yes, it is challenging. Transportation, I didn't know you did that. So I just kind of want to ask, what does that mean? The transportation bonds?
So not a lot of times, sometimes as you go through one of our many construction projects and you're rolling through there at 35 miles an hour, wishing you were somewhere else, but sometimes there'll be a sign that says, financed by Garvey bonds or something like that. So a lot of times we help provide that bonding support for those projects. That doesn't mean we just definitely dole out the money for all of that, but we do help support those kind of efforts because it's really about trying to help the economy, try to provide urban renewal projects. For instance, just to give an example of something else before I go off this rabbit hole here. This is awkward, right? I'm supposed to be a little awkward?
Yeah.
Good.
Well, that's why we're talking about, when I drive through town, it's like playing Frogger with construction, right?
See, that's right.
Which block is going to be closed today?
Well, it's like I told you,
Now I can blame you.
you invited me because you knew I'd be a little awkward. So, for instance, in Idaho Falls, and we do projects all over the state, but in Idaho Falls, the old Bonneville Hotel has been there for a long time. Very historic hotel in Idaho Falls, but it kind of fell in disrepair. It's one of those, we tear it down and we keep it. So we've helped fund a project to renovate that, to turn that into affordable housing units. So that's in that. Those are the kinds of things. There's some projects downtown that we've participated in to try to help low to moderate income create affordable housing. I mean, the word we use most really around Idaho housing is affordable. Affordables are kind of our mantra. How do we create affordability in a market that has been pushing hard against that in the last handful of years, at least? And that's so because it's difficult, but we do have some opportunities as a housing and finance agency to impact in a way that's unique. And that's what's great about it. I mean, that's the reason I came to work here. I've been in the industry a long time. Gray beard is evidence of that. And Idaho Housing, the reason I came here at Idaho Housing is because we do have some unique propositions that can really help people. And so, if you're at Idaho Housing, that's kind of where it's at. How do we help? Right? It sounds very cliche and dramatic, but that's the truth of it. We get up and we said, if we're doing our job right, we're figuring out a way to help. And it's not easy. I mean, we can't just all of a sudden say, hey, you know what? We're going to offer a loan program at 2% interest. So yeah, we're just trying to figure out a way to help. And so we've grown a lot because the need is growing a lot, right? Whether it be in rental assistance or in one of our other programs that offer low income housing credits. So there's a lot to it. Certainly single family lending is growing a lot as our service. We service now about 285,000 loans in our Boise center. So that takes a lot of people.
So, and you say too much money, you said $500,000, but what really is the cap?
Our income limit now, we just raised it. And it's interesting too, because when I got to Idaho Housing, it had just gone from 90,000 to 110,000, which sounds like a lot of money. And it is. I mean, it used to be you make six figures, you're in the top 1% of people in the nation.
Right.
And now to buy a home in Idaho, it takes a lot of money. So we've consistently raised that because we don't want to exclude. We want to have a good portion of people be able to qualify. So we went from there to 125 to 150, and then last year we raised it to 170,000. So 170,000 is the qualifying income limit, and if you're over that, then you wouldn't qualify for our programs. But if you're under that, you can, and those programs include things like down payment assistance. And some programs that are specialized that government agencies, whether it be Fannie Mae or Freddie Mac, offer to housing and finance agencies specifically that can give people a little bit of an edge in buying. So
you help with interest rates. Aren't yours a little bit lower in interest rates, or are they not?
Elizabeth, you never say that if you're in lending, even if you're anywhere we're at. We never say ours are the lowest. But what the truth of it is, we do because of our mission and what we're trying to do. We are not trying to, we're not trying to worry about stockholder price. We're not a nonprofit, but that's kind of we look at and feel like a nonprofit agency. And because of our mission, we want to make sure, how do we offer the best opportunity? As you know, interest rate, the lower the rate, the more you qualify for, or a quarter difference in interest rate, an eighth difference in interest rate. I see stuff all the time where the difference between approval and not approval is about this much, right? It's like, go find some change in your sofa and you can qualify.
Right.
It's close. Every eight counts. So we try to offer the best rate we can right up front and give people the best opportunity. Now, that doesn't mean that our rates are a point lower, but what it does mean is hopefully we have a very, very competitive rate all the time, as opposed to all the other loan programs that our lenders may offer. That's the great part, since we don't offer retail branch. So what we do is we offer our rates to the way you get an Idaho housing loan if you're buying a house is you go to a lender that's most about 95% of the lenders in Idaho that offer mortgage loans or have a relationship with us. If Idaho housing program, if our program is the best one for that lender's borrower, for your client, then they'll put them in an Idaho housing loan. So we try to present our programs in a way that it gives borrowers the best chance, whether that be with rate or with down payment assistance, which is one of our bigger opportunities. And one of the things that's great is that about 60% the last couple of years, and this data is about 6 months old, but last time we looked at it, about 60% of the people in the United States that cannot qualify for a home is because they lack the down payment to do so. So lack of down payment is by far and away the biggest barrier of entry to homeownership. So we have an opportunity. We can't fix everything. Certainly, we can't say, I'll give you a 2% rate so you can afford the monthly payment. But what we can do is offer down payment assistance. So now we know at least that much of the time we have a solution that we can offer our lenders that they can offer to people.
And they don't have to be a mortgage lender, it's banks.
Anybody that offers retail mortgages. Yeah. You know, if a bank has a mortgage division, we can supply our programs to them. Mortgage non-depository institutions, a mortgage banker, we offer our programs to them. Mortgage brokers, we offer our programs to them because we want to make sure that we give that opportunity to everyone so that their clients, just lender A's clients, but lender B, C, D, broker, whoever it is, if they're doing mortgage lending, we want them to have an opportunity to utilize our program.
Okay, cool. Do you have any questions?
Yeah. So when you're talking about you offer that program to brokers and banks and fill in the blank.
Yeah.
Are they needing to go through your department to qualify them, or are they given the kind of the permission to qualify on?
Correct. Yeah. Our mortgage lenders, they are delegated to underwrite, fund, and close our programs. So they don't need to call and say, hey, we got this. And part of what my group, the business development team, does is we support our lenders and realtor partners, builder, developer partners in any questions about Idaho housing. What programs do we have? So I may have lender A call and say, hey, John, we have this. Is there an opportunity that Idaho Housing has that we can do this? Or I have a question about this program. I mean, the beautiful thing I liked about Idaho Housing is I've never had a job before where I understood the why better. I mean, I've been in the real estate industry a long time. Excuse my tangent for a minute. But never at a place where the why was more evident, where I was like, oh, we really are helping somebody. And a lot of times people that wouldn't have an opportunity otherwise. That's the cool thing is we have some unique help that we can offer. The bad thing is we have some unique help that we can offer. And so a lot of times our realtor partners or our lender partners are like, I think Idaho Housing does that. I know they have something, but I don't know what it is. So the biggest part of my job and our team's job is to make sure that not being comfortable with our program is not a barrier, right? Well, gosh, the realtor put this, and I say this in our realtor trainings, we offer trainings to our realtors all the time because I tell them in training, I don't want you to put somebody on your 6-month follow-up because just for the easy example, they don't have down payments. You're like, okay, save this money. Maybe they can buy right now, right? Before the price is $10,000 more or before interest rates goes up or down. So if they're in a window they can qualify, you want to make sure that the lenders are educated or the realtors and they know, hey, wait a minute. I just went to an Idaho housing class and I think they don't have to wait, to that person that wants to buy a home. If they have an opportunity, we want to make sure that they're presented with that. And so my job is to make sure that the information's out there for our lender partners and our realtor partners so that they are ready. If they need us, we give them everything they need to support that. Did I answer your question?
You
I'm just
did.
running in circles.
No, that was good.
So I get a lot of parents that don't like their kids maybe don't understand financing so much, but you have a new program for those people that are don't you have like a financing web? Because you do Finally Home. So Finally Home's that program where you have to like take it to get the loan, but it teaches you about home buying. And then you have a new program. So do you want to talk about those two?
No, yeah, of course.
He said no.
No,
Then he
I
said
mean,
yeah.
Mhm.
So I'm not sure.
Like when you
which one.
say, yeah, no.
yes. Yes, it's the answer all the way around.
Okay.
So we do have, and that's part of it too. And sometimes that's get lost. You get caught up in loan programs or down payment assistance or things like that. Or the fact we have counseling services that help people. But really, part of it, we're not just trying to help people get in. We're trying to help people get set up to get in. And I think now, because they don't teach a lot of, when I was in school, there was classes that back in the day taught you how to balance a checkbook or home economics or things that were some practical application classes that a lot of that's gone away. So we have, two things. One, we have a Finally home buyer education, which is HUD approved home buyer education class. It's used really nationwide, even though it's an Idaho housing home buyer education class. It's used across the nation. And there's several of them. But if somebody's doing Idaho housing loan, we require that one. A lot of times with first-time home buyers, they're required to take a home buyer education class to qualify for the loan. So that's part of the approval process. But more importantly than that, the reason that's important is, one, it teaches them how to be a successful homeowner. And really it comes down to that. That's why I stress in, whether it's a class with my real estate agent partners, or with our lenders, this is the importance of it. Let's not make it a have to. Oh gosh, we have to take this Finally Home homebuyer education. It's an online class. The director and the Finally Home team has really done a great job of making it very user friendly, but it really does teach them anything from budgeting to credit to, avoiding foreclosure, to things like what happens if my furnace breaks a year in, and all of a sudden it's like, oh gosh, I have this brand new house and this new house payment. Well, hopefully the furnace doesn't break in a brand new house, but so all of a sudden they have these capital expenses because there's no landlord to go, yeah, we'll be able to get that fixed or we'll have that replaced. Now what do you do? But this prepares them for the eventualities of home ownership. And so that class is fantastic in that now, and this is what I stress often in class, if you're a realtor or lender, you want that person to be a lifetime client. And if they crash and burn on house number one, something happens, they're not ready for it, they didn't budget correctly, they didn't have the tools, the financial tools to be ready for that, and they struggle, they may be out of the home buying game for years. And beyond that, for the realtor and the lender, it's, what about that person? Now they have to start over. So this class is, here are a lot of important information for you to be successful. And now beyond that, the new class you're talking about is our financial basics class, which our our Finally Home team developed over a long period of time. We've had, I think now for about, they're going to be mad at me if I don't get this right, but we've had it about 4, 5, 6 months. It is, financial basics covers everything from, checking savings account, how to use a debit card, how we don't have a new supply of money, anything from what overdrafts are, mutual funds, some basic, this is not a financial planning from a investment standpoint, but it does cover money market accounts. It covers budgeting, what's credit, how's your credit, what affects your credit score, anything you can think of that, that gives people an opportunity, a platform. I see it for people that, it can be high school kids, it could be college kids, it can be somebody that's 50 years old. It is just really let's reconnect financially with the financial basics of life. How do you get through day to day successfully? What are some of the things you need to know? And so that class right now is free. Since it's still new, we're still offering that for free, and we've had a lot of people take it already. I have a 21-year-old son, so I encourage him to take it and talk to him about taking it. Of course, when they're 21, they are smarter than you. So he's smarter than me. So maybe he doesn't need to. But I think, all kidding aside, it's important. It's important.
It is important. I think our kids, the younger ones, they don't have cash. So, like parting with cash was so hard when I was growing up, because I would make, $100 or $40. And then somebody goes, well, that's 20. And you had to break the 100 or the part with your cash. But now it's just a transaction. It's just it's like sending a text. So it has I think they have no conceptual.
It doesn't feel real.
It doesn't feel real.
Right?
No.
No. I'll tell my kids, that's expensive. Dutch Brothers is a great establishment. I'm not disparaging it, but it is a high school kids' favorite place to go.
It is. There's a reason they put those by high schools all the time.
I know. Yeah. They're literally within a mile or two of every high school, and they have no concept of money.
No. Well, it is. And you hit on a good point. And I've always thought this, when I have cash, I think harder about it.
Mm-hmm.
Giving somebody a $10 bill is different than a $10 debit transaction.
Or a Venmo.
Yeah. It doesn't, and it's feels different.
Mm-hmm.
So, but this talks a lot of insurance, all of a sudden you have to get your own insurance, or, what to be aware of. So it really does a good job of, it's almost like, here's life is starting. Here's financial basics for adult, moving into adulthood kind of thing. So I think
maybe we should take it.
Yeah.
Maybe not you, Alec, but maybe I need to take it.
I'm sure we all need to.
Yeah. Well,
have you taken it?
I've gotten through about an hour and a half. There's a lot of information there, and it's all online. You stop at your own pace. It serves like a resource. And that's the nice thing. It's not like, okay, now I have to carve out 4 hours in front of this computer to go through all this. It's not like a module you have to get through it all at once or you lose your progress. They just test. It serves as a resource. You can go in and, hey, what's it say about this? What does it say about that? And go through it at your own pace.
And we'll put links to the both of those programs in the show notes. So
Absolutely.
you can go link on and do Finally Home. I did Finally Home with a client.
Did you?
Yeah, because they didn't speak English as their first language.
Yes.
And so they trusted me. And so they sat in my office and did the class. And then I would read them. I would read it to them. And then if they said, what does that mean? I would explain it to them. And then so we went through it together.
See, that's great.
Yeah, it was super fun. I don't have that kind of time anymore. I miss those days where I can sit with a client like that. Thanks.
And I find that our lender partners and our realtor partners often will, not often, but they will sit with them. We do offer it in English and Spanish, but it is for some it's a lot easier if somebody is guiding them through. So I think we are always Finally Home team is always trying to make sure they're making it easy, and I think that's the key to it. Just like talking about our programs or whether it's talking about some of these services, we got to make it easy. I mean, we could have this great program, but if it's hard and people struggle to use it, then it's worthless. So we've really tried to make it practical for people too.
What's your number one tip for someone trying to get into home ownership besides get a Idaho housing loan?
No, I would say that, I mean, there is opportunity there, but I think the number one is to prepare early. Don't wake up on a Sunday and say, I'm going to call somebody and go look at houses. So, and that's kind of the backbone of what these classes are about, right? I would have somebody that a potential homeowner, it could be a senior in high school. They know someday they'd like to buy. Take this financial basics class right now, because what you see all the time, and certainly it was the case when I was 18, I ran into this, is understand that you could be hurting yourself right now. If they get some sort of credit card, their first credit card, and they're not understanding credit and they're 19 years old, or they have something go to collection or whatever it is. Now all of a sudden they have a negative on their credit before they barely know what a credit report is all about. So I would say when it comes to things like financial basics, try to set, if you have children, you try to set them up for success. You don't have to teach them everything yourself. Sometimes there's tools out here like this that can help.
Sometimes it's better if you don't try to teach your kids.
Right.
They don't like to listen.
Right. So you make sure that there's an understanding early on. And then if you're farther along and you're thinking, I'd like to buy a home this year, take the Finally Home buyer education class, and it'll walk you through everything: the practical piece of owning a home, the financial piece of owning a home, what are closing costs, what to expect, everything to prepare you for not only the transaction, for the home buying process, but after that. And then if they take that Finally Home, then they have a post-closing toolkit. So they have a toolkit that's added to all the time. It's like a little reference box over here. Oh, I'm running into this trouble. That furnace breaks down a year in. They can refer back to Finally Home.
So I meet people all the time that say their kids can't afford to buy a house. Do you think that's true?
Um,
And they're making like good money, like under what you said as your cap limit, but more than what you said is the old cap limit.
Can they not afford this house or this
Oh.
house?
we had a few years of 2 and 3%. So now people think that's the norm when it was almost a once in a lifetime, first of its kind opportunity. So rates are still very good, but we've never had this combination of higher sales prices, and rates being where they're at. And to channel my dad for a minute, I tell people sometimes, it's one of the more expensive markets, one of the most expensive market we've ever been in. And they're like, well, wait a minute. I remember when rates were 13%. And I said, yes, rates were 13%. Rates were 10, 11% when I bought my first house. And my first house in Boise was $72,000, right? So 10% isn't too bad when you're financing $72,000. But when you're financing $400,000 or $500,000, now all of a sudden 7% seems like a lot, even though that's a pretty good rate. 6% seems like a lot. A couple of years ago, maybe this isn't something I should say because that'll make people go, oh, but there are solutions out there. But we were the second most expensive market in the nation, metro market.
Years ago.
Yes, a couple of years ago. And they say, well, there's a lot more expensive our markets than us. Yes, home prices are higher other places. But that study was done on wages versus home prices. Wages versus home prices, we were challenged. And so it is harder now. And the hard part about my job, and this is what we're always trying to figure out an answer to all the time, our 365-day a year commitment is how do we figure out how to create opportunities for people to buy. So, but when you have somebody that had this happen, the example I'm thinking of is over a year old, but it happens often. In this case, it was a young couple wanted to buy. They both had, and not that this always matters, but they had done everything right. They'd gone to school. They were in the occupation of their choice. Both had good jobs, far better job than I ever got when I got out of college. But so they were both doing well, making good money, still really, really struggled to buy. They were having to push farther and farther out away from Boise to try to find something they could afford. And they were doing everything right. So that's the challenge. So how do we overcome that? There are a lot of different ways that people are trying to close that gap.
I've seen, I had someone talk about roommates buying. Like, I would buy a house and then you two would rent from me and that would help pay the mortgage. I think it's skipping all of those fancy things like DoorDash.
Well, the common joke is maybe a few less $6 coffees, right? You buy a home, it's all of a sudden, maybe I don't go to Starbucks or Dutch Bros or BlackRock or whatever your choice is. Maybe you do that a little less, right? It's amazing. Some of these classes that we have, whether it be Finally Home or Financial Basics, they talk about that very thing. You start accounting for every dollar you spend in a month. There's a lot of dollars that could be cut out with barely even noticing. Maybe you're a little more tired because there's less coffee on the menu. Non-essentials eat up a lot more of people's budgets than they have any idea about. We see that every day.
I had a friend and she was in her 40s. She didn't have kids. And she said one year she did it for environmental reasons. So she didn't do it for any other reason than packaging, right? The packaging on new products, she felt like was contributing to her version of the environment. So she's like, I'm not buying anything new for a year, only buying new things if I health or safety related. That's it. So I think she could go to a consignment store and buy something used, but she couldn't just buy new stuff. And in February, she's like, where did all this money come from? She's like, I had no idea how much impulse buying I was doing on buying those items. And I've tried it every year. I'm like, let's do that. It doesn't work. But it is a thought.
No, it does. People think, well, yeah, of course, but you don't understand how much money is there. There's a lot of money. You talk about, gosh, that house payment, looking to buy, see this, with anyone really buying a home, not just, I was going to say first time home buyers and new buyers, but really anyone's looking at, gosh, I feel comfortable at whatever. And just make the math it's simple. It's $2,500 a month. I feel comfortable with that. I don't feel comfortable at $3,000 a month. And then also, of course, the house they want is going to cost them $2,900 a month. So now they're like, if that payment was a little lower, if they were to look, there's many times where $300-400 a month is sitting there in very non-essential stuff. So it's like you quit doing those things, and now your net is the same. And that example is all over the place, but the thought process is where you're trying to get to. So if you want to buy, you got to start thinking about what's my priority. Okay, and so what's my path? Whether it's educate or take a look at your budget, or if you don't even know how to do that, that's what some of these classes we talked about are about. They talk about budgeting a lot. They talk about some of the practical things you can do to buy. And sometimes a little bit of practicality is all that's separating you from homeownership. Not all the time.
Right.
But sometimes.
Yeah, I remember I was refinancing or something, and my friends were all going to San Diego for the weekend, and they were like, "Don't you want to come?" No, I can't. I have no disposable income this month. And you're like, "What? What's wrong with you?" Because I did have disposable income. I just was focused on getting this refinance thing done. So yeah, it's choices. We all make choices. All right. Do you have any questions?
You know anything about the recapture?
Generally?
Yeah. Well, because I know generally what it is. So when we present those two sets of essentially documents, recapture.
Yep.
If they sell, right, within a certain time frame, they're obligated to reimburse. Is it Idaho Housing back?
It's for some products, not all of them.
But then there's a reimbursement of a recapture. So have you ever seen anybody actually have to pay on a recapture that didn't get their money back?
Yes, but very rarely. And recapture, to Elizabeth's point, we only have a recapture clause on one product and we don't offer that product all the time, but it's our tax exempt bond program that we can offer as a housing and finance agency. It's one of the advantages outside of down payment assistance and some of these other things that we can do, things that we get to make our rates a little bit cheaper. We have a program that's a program that I mentioned earlier that's for first-time homebuyers. Although it's first-time homebuyers, and depending on the county you're in, certain counties, non-targeted counties, you have to be a first-time homebuyer. Non-targeted counties, you don't have to be a first-time homebuyer. So we have this program. The state of Idaho gets an allotment of funds for the programs like this. And it can be a variety of different programs, but they get this allotment of funds every year. So we'll get our allotment. We'll know what we're getting in soon. That conversation's going on right now. So every state gets a certain allotment of these bond funds that they can allocate for whatever these projects are that meet the criteria. For many years, Idaho Housing got all the money because we were the only entity that had a program or were doing something that fit the guidelines for those funds. Investors that invested these bonds don't have to pay taxes on the interest from those bonds, and that's very loose description. So, what does that mean? It means the IRS has their figure in it because there are some tax breaks that are given here. So, because of that, they want this just for owner-occupied property, primary residences. This is not a cheap way for someone to buy a rental, right? So they're very rigid about that. So I won't go into them all here, but there's a set of circumstances that if you sell it within the first 9 years, and they got to meet these 3 criteria, there's a chance that you might have to pay a recapture tax. If you're the borrower, you may have to pay this recapture tax if you meet all these criteria. If the stars line up, you meet those, you could have to pay a recapture tax. So what Idaho Housing has done to mitigate that, it doesn't happen very often. We don't get those. That is the vast minority. It's not like those pop up all the time, but when they do, the vast majority of the time, we have a reimbursement policy that said that if you meet some basic criteria, you didn't rent the house out, you didn't add a bunch of income, because the income restrictions on that program are different. There's a different set of income limits for that program. But if you didn't violate these couple of things, we'll reimburse it. And most of the time we reimburse. So let's say we get a half a dozen people there in a year, probably not even that. I don't have the stats on that, so don't quote me on that. We get a handful of people that said, hey, I'm hit with this recapture tax. The 5% of the time we're going to reimburse that tax after they pay the tax. They let us know, we reimburse them for that penalty. The only times we don't is if they did something, naughty on the front end, right? If they got into that loan with a little bit of untrue information, then it's like, wait a minute, you had this borrower, this person that was on the loan that was living there too, that we didn't count that income. You wouldn't have qualified for this program. You didn't disclose that, or you got married 10 months after you closed the loan and presented yourself as a single person with this much income, and really your household was going to have this much income. If you do something like that, I don't know if you can use the word jinky on a podcast, but if you're jinky about it, then
That's what the J stands for.
Yeah, we're not going to reimburse you.
What?
Oh, but so it's a long-winded answer to say the vast majority of the time that recapture is not going to impact. So it's a thing, and we disclose it. It's very clearly disclosed. Any borrower that gets this loan, there's all sorts of disclosures, and that they're very clear. This is it. This is what you have. Here's the fine print for this really low rate that you got. You're saying this, but if they came by the loan honestly, that's not something they have to worry about.
Good to know.
All right. Any other questions? We got a lot of information out of you.
Well, that's because I never quit talking. Well, and I did apologize if I rambled. There is a lot of information. Home buying is so it's mysterious to a lot. I have a lot of realtor partners that will ask me questions, even our lender partners that ask questions, and I know the questions that are getting asked to me most of the time from them. So if you're a borrower, if you're just a person that's not in the industry, I can't imagine how daunting that is sometimes. Really, just try every day to take the daunting part out as best we can, whether that's offering classes to you as a realtor or title companies host classes. We've done classes here at Stewart. So, and a lot of places throughout. The reason we do that is because it can be overwhelming.
So can a consumer call you and just ask questions?
Absolutely.
So,
Yes.
I mean, they can take those classes. The Finally Home isn't that expensive. It's like
It's depending on your income, it's no greater than $50. And then that goes down depending on their income level.
And then
So
the finance one is free right now.
and the financial basics is free. And I'll give you the links to all of those. Keep in mind, and this is something I would stress too, as it comes to prepping to buy. If you want to buy, you take these classes right now. It's not like I can't take that class until I'm involved in a transaction. That's not the case at all. In fact, that's probably opposite of the way it should be. What it should be, that financial basics class should be taken early. That finally home class that will meet the home buying requirement for a new homeowner. That class could be taken anytime because they last minimum 2 years. So you could take that class now. And then if you bought a year and a half, that certificate would still be good if you needed it for qualification.
And I always think it's good to go talk to a lender because sometimes you qualify and you don't even know it. You don't, I find that true all the time. I'm like, let's just go talk to a lender and see where you are, and they'll help you get where you need to go and tell you what you need to do instead of taking advice from Uncle Marv that hasn't bought a house in a really long time and just gets his information from the home shop network.
See, and that's true. That's why you should be on camera. Funny you say that because last year I was at Freddie Mac came in and did a conference, and it was broad ranging. It has a lot of market information, anything from how people use social media to their programs, all these different things. But one of the things they're talking about different generations and how they respond. And they said, but the thing that stuck with me is they said that, and I don't want to pick on generations, especially with younger buyers, 20s and 30s, there's like, I don't know how they got this stat, but 40% of them disqualify themselves because they talked to their uncle. Their uncle said, I need this. Or my friend said this. So I read on, I'm not disparaging TikTok, but TikTok said this, right? And they don't even try. They don't even, to your point, they don't even try.
Down. They need 20% down, and you don't need 20% down. And I've had people buy for 100% down, and my seller goes, I don't think they're very well qualified. They're getting they're not having any money down. And I said, that doesn't mean they're not well qualified. They wouldn't get that loan if they weren't well qualified.
Well, and that was the shocker thing. They even used that example in this, and a 30-something that because they heard it from someone else, they think they need 20%. And they don't even bother to talk to a realtor or talk to a lender. And the truth is now, and this is not some funky high rate back alley program. You can buy. That's why I say down payment doesn't get your way because you can buy a house for $500. I mean, it doesn't matter how much it costs. Barrier of entry is money. $500 is what you need. Now you have to be able to afford the payment, all of that. There's other stuff.
Absolutely.
You have to make payments. A lack of down payment will never be an obstacle. If you need $500, $500,000 house,
as long
$500.
as you make under $170,000.
170. Yeah.
See, I had to caveat that a little bit because I can't go buy a house, if I make more than that.
Yeah.
I don't, but I'm just in case. I don't know what I make. That's my husband's job.
That's good.
He gets very.
His job is to count your money. His job is to count your money.
Count is.
If you make $250, you're
out.
Hopefully you have more than $500 put down.
I've had almost $500 put down when I was first time home buyer. I was poor.
Mm-hmm.
All right. This has been fun. Thank you.
You're welcome. Thank you
so
for asking me. It was great.
We can have him back again for another, because there's a lot of information.
Gotta make sure the cameras work, and I'm not late.
You were late.
I was late. And now I gotta go. I'm gonna be late to my next thing. I'm a horrible person.
See how this is?
Jeez, Louise.
Horrible.
Well, all right. Thank you for coming.
You're welcome.
Maybe it'll be better this time.
Or maybe it'll still be awkward. This is Alec and Elizabeth with Awkward Conversation State.